Disclaimer: the author of this free audiobook is not responsible for your financial choices in any way, shape, or form. This book is not investment advice. Always do your own due diligence. Caution: the content of this audiobook may cause your brain to function better than before. This is the full audiobook, written by Renee Drost. The name of this book is How to Become Rich. Chapter 1. Live Below Your Means. To live below your means is the most simple way to start accumulating money. Spend less money than you earn, and you shall build up your first stack of money. That's a simple rule, right? Almost everybody can do it. How do you start, and is my joy of living not affected by it? You start your wealth-building journey with looking where all of your money is going. See your life as a business. How much money goes into your wallet and how much is going out? You must have a good view on where your money is going, because then you can make a plan to budget your expenses. For example, you discover that you buy too many clothes or you spend too much on food. It can also be that you buy too much luxury gadgets. You have to know that nobody is giving a crap on what gadgets you own. Rich people don't show off their wealth as they try to make you believe on TV. Just stop spending money you don't have on things you don't need to impress people you don't know. First, get rid of all your debt. This is the mindset you have to be in to get ahead of the broke people around you. First of all, you have needs, second you have savings, and last, you have wants. Later on, your savings become investments. But the first thing you do with money you saved is making an emergency fund for yourself. This emergency fund is needed to pay for unexpected costs. A couple of $1,000s is enough. But it depends on what you own. Maybe you drive a car instead of riding a bike. Make the fund as big as it needs to be when things you really need break down. You will really be happy when you have an extra $2,000 when an unexpected expense comes along. And believe me, the things they make today are not built to last. For example, you can spend money on the broken-down washing machine without any worries, and that will give you some freedom. Freedom is the ultimate goal here, and that automatically gives joy to your life. Chapter 2. Getting Started on a Low Salary. When you know where all your money is going, you can make decisions on what you want to spend less money on. Allow me to tell what I personally did to save extra money on a low salary. I cut my expenses on new audio devices and on food. I also stopped using washing machine soap because my clothes become clean enough with only using water on 40 degrees Celsius. I stopped buying things I do not really need. I made it my personal game to not buy anything for a month. Then I went to another level, not buying anything for half a year, and now I rarely buy things. Most of the time I buy food, and that's it. I keep my life stress-free and simple. I enjoy things that don't cost anything, like a walk through the park. My beverage of choice is water or tea, and in the morning at breakfast, cheap but good instant coffee. The instant coffee is so cheap, 1 cup of coffee costs me about 5 cents. I eat 250 grams of raw ground beef in the morning, and my second meal is usually around 7 o'clock in the evening. That second meal is usually 250 grams of ground beef with some salt. But with warm weather, my meal can be cooked rice, mixed with 1 or 2 raw eggs and some salt. Ground beef and eggs are healthy and still not too expensive in 2024. When I want to treat myself, I buy 1 can of beer or a bag of chips. Notice that this is my personal choice, as it's cheap and healthy enough. Note that in 2024, inflation is very high, My weekly food costs me about 30 to 40 euros. And that is really cheap for a man living on his own. I do not know your living situation. It can be different for you. My hobbies are relatively cheap too. I record music from internet and make radio programs for my own pirate radio station. It's a low-power transmitter, so electricity is not that of a cost. And my other hobby is saving money and invest for the long term in the stock market. The market that I invest in at the moment is the commodity market, because that market is very unloved right now. And that brings us to the next chapter, investing. Chapter 3, Investing in Stocks. After you bought the things you really need, you pay yourself first and invest the money in stocks. To trade stocks, you need a broker. That's a platform where you transfer money to, and then you can buy shares of different companies. When you buy shares of a company, you become an owner of that company. First, you need to know what sector of the market is hated or at least unloved. This is where the really easy money is made. Second, you look at different companies in that hated sector and look at the management team of that company. Is it a capable management team? If the answer is yes, you go to the next step and you look at the size and the scale of the company. Only big companies can make you big money. Remember, we are investors, not traders. Step number 3, does the company have free cash flow? Free cash flow is the best sign of a healthy company. At last, you take a look at the price chart of the company. What you want is a low share price and a dividend as cherry on the top. But do not fall for a company that pays a little too much dividend, because that can be a dividend trap. You can use TradingView.com for the technical analysis. We first did the fundamental analysis, and now the even more important step, the technical analysis. You can look at charts as a roadmap. The candles that make up the chart are not just random lines. It is in fact mass psychology with the emotions of disbelief, hope, optimism, belief, thrill, euphoria, complacency, anxiety, denial, panic, capitulation, anger, and depression. When everybody is in depression, you want to start buying. When the sentiment is thrill, euphoria, or complacency, it's time to sell. Buy low, sell high. It sounds so easy to do, but it's not, because of your own emotions. You have to be counterintuitive. And you have to look at market conditions. Use 3 pillars to invest in markets. I use ratios to find value in the markets. I then look at market conditions to identify when the ratio's value will rotate from undervalued to overvalued, and use technical analysis to validate that the rotation is in fact occurring. Fundamental and technical analysis go hand in hand when I search for the right moment to buy or sell a stock. If you want to learn to draw the right lines in a chart, go to the page of Andy from Finding Value Finance, or go to the page of Casper named Uselink on YouTube and on Twitter. For great insight in fundamental analysis, listen to Rick Rule. And when you want to do the opposite, listen to Jim Cramer on CNBC on YouTube. Because this is an audiobook, you have to follow Andy and Casper to learn and do technical analysis yourself on TradingView.com. TradingView.com is free, and you have great dividend information, and you can do all the ratios you want. With ratios, you simply put assets versus assets to determine which company or commodity is more undervalued. You want to find value and not chase price. In time, assets go up in value, and liabilities only cost more money and go down in value. People who win the lottery often buy an expensive new car. That's not smart because a car is a liability. Rich people acquire assets and reinvest the dividends while the assets rise in price. It can take 10 years before investors take their profits by selling their stocks. All good investors have a lot of patience. Chapter 4. Patience. Not many people have the incredible power of patience. Doing nothing with your portfolio of stocks is the hardest part, because people always want to take action. But there are times that you don't need to take action, and you'll have to wait for the right moment. Investing is not a get-rich-quick scheme, but you slowly accumulate shares on the dips. One day the market is up, and another time it is down. This has little to nothing to do with the company. Another strategy is cost average into your positions. Or if you want to sell, cost average out of your positions. By doing this, you can take action but stretched out over a longer time. This way you get an average price for your stocks. All I have left to say about patience is that it becomes easier with age. The longer you are in the stock market, the better. Chapter 5. Valuable knowledge about your journey of getting richer. Investing in stocks to get richer is the most easy way to do it for most people. That's why I did not recommend everybody to buy real estate. But that sure is a good way to get richer and financially free. Freedom is the ultimate goal of becoming richer. Getting out of the rat race, not having to get up early because you have to, that's so valuable to me. Another important thing is that you simply cannot trust mainstream investing channels or people who sell investing courses online. The most obvious man you can't trust is Jim Cramer. He is so consistently wrong all the time that people do the opposite of what he says. And a man called Harry Dent is a broken clock. Every year and every month there will be a market crash, according to him. One day it will happen, sure, markets move in cycles. One day he will be right. The question is not, will the market crash tomorrow? The question is, in which market are you positioned? Are you in a sector of the market where everybody and their grandmother is in, or are you in a market that is unloved or even hated? In 2024, everybody is in the tech market, especially Nvidia. The price chart goes almost vertical, screaming that it is in bubble territory. Other mainstream-minded people are in everyday companies like McDonald's, Apple, Microsoft, NN Group, 3M, etc. Usually they are in those stocks for the dividends, and hopefully they get a little upside in share price. But why buy them at the top, when you can buy commodity companies on the bottom, with big dividends, while the chart is in an uptrend? Seems like a win-win situation to me. And why not concentrate more instead of spreading your risk? When you find a really undervalued market, you can concentrate. That's how billionaires became billionaires in the first place. They could buy a lot of shares for pennies on the dollar, with a lot more upside potential than downside risk. They only buy 2, 3, or 4 companies, but they research them till they know all the ins and outs of the companies. For example, if you have a portfolio of 88 companies, I doubt that you know all about the businesses. It becomes impossible to research them because you simply do not have enough time for it. This audiobook is not made with fancy stories around the subject to entertain you. I only give you the insights you have to know. These insights of the psychology behind investing in the stock market have made me be a better investor. It's all mass psychology. And it's all about the different cycles and patterns in different time frames. You will notice repeating fractals in the charts, just like fractals in nature. If you want to know more about how to draw trend lines, or if you want to know more about fractals in technical analysis, research it on YouTube. I only gave you the necessary basic insights. It's on you to learn more. Finally, I want to say to not be too harsh on yourself. Even the best investors make mistakes. And a really common thing is, when you just bought some shares, the price goes further down. Buy in tranches during the month. I wish you all the success in the world.